this is Leah Leggett with the Morse Leggett Property Group of Greater Athens Properties. I've been asked a lot lately about this market. Interest rates, what's happening, what's going on, is it going to crash? So I wanted to do this video to touch on what I'm seeing, which is based off our local data. Not anything that I've read or heard, but actual data. And I want to start by talking about recessions. In history, at the beginning of a recession, interest rates go up, like we see now. In order to get out, interest rates are lowered to stimulate the economy. Moving forward, historically, we've seen a repeated uptick in interest rates, followed by lower interest rates. In the 1980 recession, interest rates went from 16% to 11.8%. In the 83-84 recession, interest rates went from 18% to 13%. In the 91 recession, interest rates went from 11% to 8.8%. In the 2002 recession, interest rates went from 7.4% to 6.8%. In the 2009 Great Recession, interest rates went from 6% to 4.9% and stayed in that 5% range a long time. Then during COVID times, we dropped from 3.8% to 2.8%, and now we are seeing an uptake, which indicates we are in a recession. Over the past 5 recessions, mortgage rates have fallen an average of 1.8% from the peak during the recession. In many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. Recession does not equal a housing crisis. Only 2 times have house prices actually went down. In 1980, they went up 6.1%. In 81, they went up 3.5%. In 91, they went down 1.9%. In 2001, they went up 6.6%. In 2008, they went down 19.7%. In 2020, they went up 6%. So home prices only went down in the 91 and in the 2008 recessions. So today, what we see is a slowing down of appreciation, and that's good news. Offers received are down, offers over asking price are down, overall sales are down, but inventory is turning around because home sales are slowing down. Mark Fleming, chief economist, said there has been a pickup in inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. And remember that month's supply measures the inventory of sales relative to the pace of sales. Same inventory, fewer sales means more months supply. So in January, we had 1.6 months of supply. February, 1.7 months of supply. March, 1.9 months of supply. April, 2.2 months of supply. May, 2.6 months of supply. So supply is increasing. 6 months supply is a balance. So we are still in a low supply market, but we are coming out of where we've been, which should encourage buyers to get into the market because it's going to be a little less frustrating. We are starting to see more monthly listings than we saw in 2021. Existing home sales are leveling off to where it was in 2017, 18, and 19. 2017, we had 5.5 million home sales. 2018, 5.3 million. 2019, 5.3 million. 2020, 5.6 million. 2021, 6.1 million. 2022, 5.4 million home sales, right where we were in 2019. So we are headed towards a normal real estate market, which is good news. And we need to quit comparing things to 2021 because that was just historic. Lawrence Young, chief economist for the National Association of Realtors, made a statement recently that home sales have essentially returned to the level seen in 2019 prior to the pandemic after 2 years of gangbuster performance. Yes, he used gangbuster. So active inventory is continuing to grow. It's risen 21% above 1 year ago. So in other words, we are seeing more inventory, but the market needs even more inventory, even more homes to hit the market before home shoppers have a selection that's roughly equivalent to the pre-pandemic housing market. 2022 inventory is still low, but up 15% since January of this year. So with that said, we should start to see less competition, fewer bidding wars, and less upward price pressure. In fact, a simple analysis shows a 1 month increase in the month's supply results in a 3% decline in annual house price growth, and the preliminary house price index is already showing moderation in house prices. This is a good thing, as we couldn't continue the pace where we were. It was going so fast and unsustainable. Should I buy a home right now? We still have people looking, quite a few people still looking, but I keep hearing nobody wants a home that will go down in value. There's a lot of fear in these buyers. Everyone just needs a better perspective, because decelerating home prices do not mean depreciating home prices. So remember that. We are expecting the amount of appreciation to slow. Forecast for the 23 through 2026, we're about 2022 9.9 appreciation, but 2023 to 2026 appreciation should go back down to about 4%, which is the appreciation we used to see pre-pandemic. That's normal. David Ramsey said the root of issue that what drives house prices almost always is supply and demand. Now, interest rates affect that. When interest rates go up, there are fewer buyers and the demand goes down, thus making prices soften or not be as crazy as they have been. And that's what we're seeing right now, people. So what does this all mean? Now that house prices will be leveling off, and that is what we are seeing. House prices are leveling off. I was worried for a second about people's ability to buy a home, but the data speaks for itself, and so we should all be optimistic. Experts don't believe the market is in a bubble or that a crash is in the cards like during the Great Recession, as the nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider homeownership. That's likely to keep prices high. I agree. So if you're a buyer, keep in mind things are going to slow down and you will have more opportunity, which is a welcome change. So if you've been looking to buy a home over the last couple of years and it felt impossible to do so, now may be your opportunity, as buying a home right now isn't easy, but there is more opportunity for those who are looking. It's a good thing. And if you're a home seller, it's important to price your house right at the beginning, as it's super critical right now to price it right. So make sure your realtor is pricing your property accurately and that they've double checked those numbers. Even before you put the house on the market, double check those numbers. Don't just go what the first realtor tells you your home is worth, because it's critical that somebody really understands and is studying this particular real estate market. It's changing every day. And sellers, you're also going to have to do some things that you probably will need to take care of with getting your house ready for the market that you wouldn't have had to do or take care of over the last market that we were in. We were just telling people, sell it as is, you don't have to do anything. Not the case anymore. So thanks for listening, and I will continue to keep you updated with data through this market correction. So call me with any questions or concerns you may have on the housing market. And as always, talk to a local realtor and don't just listen to whatever is on the news, because that is national news and it's meant to scare you, and every market is different, and the market is still a strong market. It's just leveling off and correcting itself. So that's my update. Thanks for listening.